we know exactly what we're calculating. What I absolutely don't want to do is introduce all this noise like Chainlink does. Chainlink just tells all its nodes, okay, fetch us some price. But it doesn't know where the price has been fetched from. It doesn't know how it's been calculated. So it's just taking a median of median of median of median. It's not precise at all.
People need to know that this oracle is scalable. It means, yeah, it works now for the price of Kas, as we show, but it can work for every coins. It can be implemented for Solana, it can be implemented for Ethereum, for Bitcoin, and everyone.
I have an algorithm that determines the fair value. It's basically trying to say what would be the fair value if everything were traded on a single order book.
Supported by Kaspa Finance, the first V3 DeFi protocol on Kaspa. Igra Labs, atomic programmability on a Kaspa block DAG. Kaskad, use your Kaspa without selling it.
I wanted to have you over to discuss version 1 of your Oracle solution, along with some product demo, and also discuss your fundraising efforts that you guys are actually going through now. But first, for someone who doesn't know Kaskad, anyone who's a new listener, how do you define Kaskad?
Yeah, if you want, I can go first. Hello, Ankit. We promised to be with you for the first demonstration of the product, so we are very happy to be here. And I think it will be most Paul, Elliot, and Jack will talk today because they master the product. But just to answer to your question, Kaskad is a landing platform on Kaspa network. So people who know what is Aave in Ethereum network, it's easy to understand what is Kaskad because it will be kind of the same services. You can land some a crypto and you can deposit in collateral some other crypto and you can enjoy the decentralized finance with the system. And some people can have a yield to bring liquidity to the platform. So it's the first break of decentralized finance on Kaspa.
So just quickly on the Kaskad itself, right? Like for me, lending and borrowing is the biggest use case of DeFi today in blockchain, right? I mean, the way I like to think about it, it is the biggest actually dApp on Ethereum today, right? Aave, you mentioned, and you guys are actually going to be bringing Aave's fork, right? 3.3. I remember last time we talked about it. Obviously, correct me if it's different, it's changed, which means
No, that's true.
Yeah, which means people can deposit their Kaspa as collateral and instantly borrow against it. Very simply, right? If you want to borrow something, you can use Kaspa and make use of that sitting asset that is just sitting there, right? They can actually do something with it now once you guys are obviously live. So we connected last time in September. And, I think I had 2 sessions, one with you guys, and then I had one with Elliot. So just quickly, Elliot, you look different. What's different?
The bleached hair.
That looks cool, man. Give us a background quickly.
Thank you. I mean, I needed a refresher. So too much fame, too many people recognizing me in the streets, so had to change that.
I like it. And welcome, Paul. We didn't get a chance to talk to you last time. You weren't there, so please tell us what's your background and obviously what's your role at Kaskad.
Yeah, hi everyone. So I'm currently a student at Paris, and I'm in Kaskad to develop the Elliot oracles.
Awesome. Good to meet you. So Elliot is the one who's writing the paper, and you're actually then implementing it. Is it the way to put it?
Exactly. Yeah.
Awesome. Thank you. Thanks for the quick background. So let's discuss Kaskad. Guys, I think before we get to see some exciting stuff, which you're going to share with us and the community, why don't we quickly touch upon the sort of high-level architectural thing? What are the other assets that you're looking to actually implement or get on the platform? So why don't we start from the assets, and then I want to go down the path.
Yeah, so let me take that. So for the assets, we are going to support a limited list of assets at the beginning, because we want to make sure that we have enough liquidity supporting those assets to reduce the risk of liquidation. This is super important when you launch a lending. So we will have obviously the bridge version of Kaspa on IGRA, which is ICAS. So this is the golden pass. You have Kaspa in your wallet, or you want to buy Kaspa, you can just buy more Kaspa, bridge it using the canonical bridge on IGRA. Then you receive ICAS, and from there you can plug your wallet to Kaskad, and then you can open a supply position with your ICAS, and then borrow against your ICAS, borrow some stable coins. But we will also support some bridge version of assets like BTC or wrapped Ethereum when those are ready. So basically, you are looking into this list of assets, ICAS, IGRA token, as well Kaskad. We will also allow people to borrow against their Kaskad with a slight particularity. I'm going to talk about it later, and stable coins as well. But we won't be opening the platform for super low liquidity assets. We don't want people to be messed with, basically.
Awesome. So let me reiterate. So ICAS, which is the gas token figure, then we'll have some wrapped. You said Bitcoin, perhaps Ethereum. I don't know which ones you're thinking of. And then you have your own token that we'll discuss later on. So plus stable coins, right?
Yeah, we obviously need stable coins on a lending, otherwise
Yeah.
there's no point, right? So
No.
yeah, this is a big subject.
Well, awesome. So stables, right. So let's quickly talk about stables then. So this is the first time I'm hearing stables on IGRA. So given you guys are going to be building on IGRA exclusively, right?
We are starting to launch on IGRA, but that doesn't mean ultimately that we are going to exclusively build on IGRA. Maybe we'll open to other chains. But right now, the idea is to support decentralization and programmability on Kaspa. So we are good to partner with IGRA for that matter. And as for stable coins, what I can share is we are already in discussion with two stablecoins providers. One is coming from this team named IGRAWay. I don't know if you've heard about it. So it's for the USDE asset. And another is in discussion with this team called M0. And we have actually a call with them today, and we are also in a discussion with Kaspa.com and IGRA, and we are, trying to discuss how we can make this happen. But we want to onboard as much as stablecoin liquidity as we want, right?
Yeah, awesome. So two different providers. IGRAWay, I haven't actually had the chance to actually talk to them, but I've heard of them.
Okay, you should.
You guys, and I think Pavel mentioned as well about them in the past. And then M0, did you say M0?
Yeah, M0. Yeah,
Okay.
they are using the hyperlane technology as well. So we are trying to discuss how we can implement this as well.
So it seems similar to Kaspa Finance's bridge, because they have a bridge solution now, right? With using the hyperlane architecture.
Yeah.
So it's sort of similar solution.
Yeah, sort of. We're
Sort of.
also discussing with Kaspa Finance, so hi to them if they are listening.
Awesome. So there are solution, and of course, as you say, right, you need stables on for lending and borrowing platform. So that's cool. I think people will get it. I don't know what these stable points are. Of course, bridge assets and everyone gets it, but IGRAWay, I don't know actually what stable coin they're gonna bring.
USDC.E, donc, so this is the one we'll be using.
Perhaps we need to connect with them and get to know what
Yeah.
this stablecoin is and how is it a programmatic stablecoin or is it actually pegged stablecoin? You know, there's so many versions of stablecoin these days. Yeah. Cool. So stablecoin is one thing. Secondly, let's quickly talk about the other high level stuff, right? So a couple of things that matter for, I guess, a borrowing and lending platform, right? The first one is loan to value ratio. So yeah, so what are you guys thinking in terms of, LTV for assets that you're looking to bring? Let's start with Kaspa.
Yeah, so what we are going to use, since we are partially forking Aave 3.3, we are going to use some a preset of LTVs that are associated with certain pools who have certain level of volume, liquidity, and volatility. So the more volatile your asset is, the less we are going to allow. The lower we are going to allow your LTV because it's riskier, right? So for ICAS, I don't know exactly how it's going to look on mainnet, but right now I can tell that on DevNet we are using a 35% of LTV as default value. But what we will implement on Kaskad, since we have this governance layer, allowing people to vote and adjust how the platform must behave according to their will, we will allow them eventually to adjust those LTV parameters slightly. We don't want people to mess with all the platform, but we will allow them to tweak it a bit from the top or from the bottom.
All right. So Jack, can I ask you to give an example here? Like, for example, if I've got $100 worth of Kaspa or ICAS, let's call it. How much will I be able to borrow against it?
So if you take ICAS as an example, it will mean that you will be able to borrow up to $35 of stable coins against your ICAS.
So $35 out of $100, right? So 35%. Yeah, which seems low, no? Like typically Aave, I believe it's around 70%. Well, 60 to 70% on a very volatile asset.
At least this is what I'm seeing right now on DevNet. This doesn't mean that this is what we are going to allocate on mainnet, but right now this is the parameters that we are testing. But for USDC, for example, I'm seeing an LTV max of 93%, and for BTC 70. So this is basically the ranges that are allowed by Aave. But we have two layers, right? So this is important to mention. We are using the basic Aave layer as incentive and also LTV parameters, supply, borrow, and also APYs. So if you supply X amount, you get paid by the borrowing interest. But on top of that, we are adding our own Kaskad incentive layer, which means that if you supply a certain amount of TVL on Kaskad, and if you supply it for a certain amount of time, then you can earn some extra reward in Kaskad. So there is this notion of LTV before liquidation, and there is also this notion of LTV if you want to claim some extra Kaskad rewards. So this is not something that you are forced to do, but this is something that we are incentivizing. And if people are willing to play along with on the platforms, they can earn more rewards. And this is how we approach competitivity on the platform.
Yeah. What about the liquidation thresholds? What do you have you looked at that? And I mean, we can cover these topics during the demo if you want to perhaps start the demo.
Yeah, I can show you the demo if you want.
Let's go. Sure. Let's do it.
So this one is running locally on my PC.
So this is exclusive for XXIM and for the community. No one has seen this before.
Exactly.
Oh, beautiful. Thank you, Jack.
So just for context, so you understand how we approach the work in Kaskad, this is not the final product that we are going to launch on testnet publicly, but basically we are coming from this local raw front that Anton and Julia are delivering to us, and then we ask Marius to reshape the design of this local front that is running locally on my port right now. And next, the goal is to redesign and finalize the design so we can show something that is going to look like this. And this is what, as a type of experience, we want to offer our users on testnet and also on mainnet. But just for the sake of this demo, so you can understand, right now I'm running the front on a local, front blockchain, and I am already connected on the front with my wallet. I have already provided a few amount of collateral. I'm also borrowing against it. But let's say that I want to supply more USDC, for example. So I click supply. I'm gonna put 500K, 5,000K, sorry. I'm gonna hit supply, confirm, and you can see that my health factor has changed, my total collateral has changed, my debt is the same because I haven't borrowed more against it. So let's borrow against it. Let's borrow, let's say, 2.5K. And now you can see that my health factor has reduced drastically. I'm still healthy, but I'm seeing that I have 10,000 worth of collateral and 3,000 worth of debt. So I can still monitor how much I'm able to repay, adjust. And you can see the LTVs that are allowed for each pool. Those pools are obviously on testnet. So wrapped BTC, wrapped ETH, wrapped ICAS are testnet assets. But this allows us to test the features, see how they behave, see what's missing, where we want to go. And this is basically a working dev environment.
Oh, I really like the UI. It's very clean UI compared to what
It's simplistic, but yeah.
Yes, yes. Can we quickly touch upon some of the things you mentioned? Like,
Yeah.
so in this example, what you did, you obviously supplied more USDC,
Mm-hmm.
and then the second step, you actually borrowed some, right? Initially,
Yes.
health factor was I think 18, and then it dropped down to 3.17. Right.
Yes.
So what is a health factor and how it links to liquidation threshold?
So the health factor is a factor that represents how much debt you have out of the collateral you have supplied. So how healthy your position is before it gets liquidated, and the closer you get to one, the likelihood of getting liquidated increases, right? So you want to stay above a health factor of 1, and you want to be able to repay your loan as your debt accrues, obviously, and you want to stay healthy. This is why having liquid market is super important for lending, because you don't want your asset to be super volatile after a few thousand worth of volume of trades in the high or in the lows. And you also want to rely on a good Oracle solution, because you want the Oracle solution to be able to fetch the correct fair prices of all the assets that you are supporting on the platform.
Yeah. Jack, are you telling me to move on to Oracle, huh?
I don't know, maybe it's a good segue to to the Oracle, right?
I want to spend a little bit of time on this, though, maybe a couple
Okay,
more minutes, and then we'll jump on to the next exciting part.
sure.
So as you say, right? So if your health factor is above 1, I think I just want to make that distinction. If the health factor is above 1, position is safe, right? If health factor equals 1 or close to 1, you're at that
Yeah.
liquidation threshold, right? And of
Yes.
course, if it's less than 1, it is triggered essentially, right?
Yeah.
The liquidation triggered. And obviously, a lot of factors kick in here. Oracle is one of the ones you mentioned, but technically it's just the price, right? But it's also other things like so how much you borrowed, right? If you're
Yeah.
you're
Of
very
course.
close to running 100%, and your health factor is close to 1%, well, you shouldn't be doing that.
Yeah, a good Oracle is not going to prevent a bad behavior on a lending platform, right? And this is what Aave has been advocating for. I think they also explained that during the October 10th crash, they were kind of safe because people on Aave are used to behaving properly as expected. So it prevented them from being liquidated for no reason. Well, no reason is a big word, but for no reason enough, I would say. So yeah, being healthy is super important. And I think there is also something important in Kaskad. Maybe people don't realize it yet, but should a liquidation event occur, because it will eventually occur for some people who are playing a riskier game, We have a system in Kaskad that allow people to actually, we have this simulator, for example, that shows that as a platform, we generate some revenues because we are, taking a bit of fees between the borrowing interest and the flash loans and the liquidations, which means that we are making money as a business, which is important and normal. But we have a system that is going to redistribute all the fees between the DAO treasury, which is under the governance of the voters, so the Kaskad users, and the overall operational treasury that is managed by the team. Which means that in Kaskad, when we make some revenue as a platform coming from the liquidations, they are actually flowing back. Most of the majority of them are flowing back to the treasury for the benefits of the active users. So they can decide how to reallocate those fees, and they can decide how to buy back the supply of the Kaskad token on the market. They can also decide how to use those fees to fund the Kaspa core dev fund wallet to boost research and development. They can also use those fees to reallocate to TVL participants to increase liquidity incentivization. So liquidation is reused in Kaskad and not just extracted. And this is the point I wanted to make as well.
Yeah, cool. I think there's an entire industry that sits on the Aave liquidation side of things. I touched upon this topic with
Yes.
Sione. I would like to get into that topic one day. Not for today though. I think it's a topic in itself, how that industry works. How they have to put up the collateral and obviously pay back the loan that was borrowed. Not for today. A topic we'll come back to for a different day. Just wanted to mention, I guess, Aave version 3.3 is battle tested, right? So that's great. You're sort of building on top of it, right? Perhaps what's new here is your own Oracle solution. So why don't we get into the Oracle and get to see what you've built? Look at that. I like it. So guys, what am I looking at? This is Kaskad's Oracle solution.
Yeah, so it's a first version of the website and the Oracle. We can see here the actual fair price with the best bid and best ask. We can also see the average latency. All exchange we get data from, and here we can see the price by source. So the price provided by each exchange. So you can see here. I can pause up. We can see here. So Bybit is a little bit lower than the rest, and sometimes Kraken a little bit higher. We can see here the spread evolution and the price deviation.
So I think for some context, on the first graph where you see the best bid and best ask, this is not the best bid and best ask across all exchanges. It's the way we calculate the fair value is at a given time t, you basically freeze everything, gather all data you can, and then obviously there's going to be arbitrage opportunities between exchanges. You simulate as if you could instantaneously fill all those arbitrage, and what you're left with is basically some global order book or condensed order book. And there you have the best bid and best ask. So it's only the best bid and best ask if you simulated all overlapping trades that exist, which obviously would take some time, but that's just a representation of, at this time, what is the fair value and what is the best bid and best ask if all orders were to trade on a single venue.
Right.
Which I think is a good representation, at least theoretically, in like mathematical finance. That's how you define an efficient market, is no arbitrage.
I'm going to take a step back here. All right. And let's take everyone through a journey, right? I guess, Elliot's your journey that you've been on for some time. that obviously led to this as the version 1. So this is your work. This is the Oracle for Kaskad. What does it mean? So let's start from that point 1, and then we get into the actual where and how you source the data, how you actually combine the data.
I mean, I think the best example so that people can understand is what happened to Binance on the 10th of October. So why is it important for liquidations is when you're looking at the health factor or just the health factor of a loan, you need to determine the point at which you start liquidating the loan. And for Binance, when they looked at their USDE, I believe, I don't remember exactly what it's called.
USDE, Thina, yes, correct. USDE.
Yeah. So USDE, instead of looking at the whole price, so looking at liquidity on all these fragmented venues, they only looked at the spot price on Binance, which is just a fraction of the whole market. And so this means that to manipulate the price of USDE for liquidations, instead of having to manipulate the whole market, because market manipulation is allowed, you only have to manipulate a fraction. So the liquidity needed to destroy and to start all these liquidations is negligible relative to what it would have cost you to do it on the whole market. And that's the problem when you don't look at the global price and you only look at a small liquidity pool or only a fraction of what the price is trading at.
Right. So in this specific example with Binance, they were just looking at their own price for USDE asset. They weren't looking at the entire marketplace or other venues, let's call it, right? More technical term here. And in this case, what you're looking at is more of a global price across many different centralized exchanges.
Yeah. It's if you thought of, it's basically trying to say what would be the fair value if everything were traded on a single order.
Right. And this is similar to Chainlink, right? Chainlink will pull the data from different venues as well, right? But how you guys are doing it, are you actually, I'm assuming you're actually pulling directly from the exchanges yourself, right?
Yeah.
So you just connected to their APIs and that's pulling directly. You're not going through Chainlink, you're not going through any TEE based like Wax or other solutions.
So TEEs is another aspect. We can talk about after
Yeah.
about decentralization, but right now we're just listening to the WebSockets of different exchanges.
Yeah, so it's a centralized solution for now. That's all you need for now.
In a sense, so there's two aspects of what it means to decentralize this solution. The first one is how can someone trust that the data we pulled is actually from Mexi, Bitget? Like they shouldn't trust us. So in that sense, that's where you use a TEE, which prevents us from saying, oh, okay, we pulled from Mexi that the price of Kaspa is 1 cent and just straight out lying. So that's the first aspect of decentralization, which we will implement because it's necessary to not have a centralized solution. The second one, which I haven't thought about as much, is once we've aggregated everything, we shouldn't be the only entity, or there shouldn't just be one server that's pushing this information on chain. We should have ideally several servers that all calculate the price, and then they can push it together. But the fundamental difference with Chainlink is here we know exactly what we're calculating. I have an algorithm that determines the fair value, and Paul implements it through, okay, we're going to go get it. Like right now we control everything, so obviously we can implement this specific algorithm. And what I absolutely don't want to do is introduce all this noise like Chainlink does. Chainlink just tells all its nodes, okay, fetch us some price. But it doesn't know where the price has been fetched from. It doesn't know how it's been calculated. If I tell node A to go get a price, he can give me just the Binance price. Node B is going to give me a median of Binance and Coinbase. And at the end of the day, I don't know. So it's just taking a median of median of median of median. And at the end of the day, sure, it's robust, but it's not precise at all. Here, I have an idea of exactly what precision is. And then the question is, how do I make it robust and decentralized? Decentralized aspect, in my opinion, is pretty easy. Robust is another topic.
Yes, robust is another topic. So, I get it. I mean, and also perhaps another way to look at it, right? And you can correct me, Elliot, here. This is more operationally efficient, also, right? Like it's perhaps quicker, and it's perhaps fits the sort of bill for now. You want to make sure that you know exactly where the data is coming from, right? You want the trust, and you can only trust yourself more than anyone else, right?
Yeah, but then afterwards we can just put TEs and tell everyone, okay, run this code.
Cool. All right. So this is only pulling spot data, right? Not perpetual data for the assets. In this case, we're looking Kaspa.
Spot data, yeah.
No perpetual.
Nope.
Any specific reason?
I mean, for the way I describe it is that perpetual is just an isolated game. Sure, there's a lot of hedging in between perpetuals and spot, but at the end of the day, perpetual is just a trading paper, and it's just betting on the price. It's not actually trading the asset. So I think it would be um, much more difficult. Like it's the same thing as when you look at the price on Uniswap, you trust that there's actual money there. In perpetuals, there is no asset. The asset isn't there. So that's why for now, at least I'll concentrate on spot, just like all oracles. But I'm not sure if it's an interesting question to know if futures should be added. But for now, no.
No. Cool. I think I obviously tend to ask questions, as you know, and the reason, perhaps, let me tell you my reasoning behind it. Because perpetual volume is actually, compared to spot, is a lot higher, right? I think the number would be 20 to 80, right? 80% volume will be going through perpetual, and then 20% volume will be spot, right? But as you say, perpetual has no underlying asset, right? It's pretty much a synthetic asset that just trades with margin, right? Very high margins. So the I guess what I was getting to is, perpetual might have this massive swing, but somewhere in the middle, the fair value might still be there. I don't know this. This is more mathematical, but because of the volume, you might be able to pick up some very interesting trends there, which you might not on the spot side. Um,
Yeah,
especially when the big swings happen.
yeah, it is like you do have just more information. So I agree, but that there's also a reason why the perpetual mechanism is to ensure that the futures price are pegged to the spot price. So
Yeah. Yeah. Cool. All right. Look, this looks amazing. So the green bar, green line rather, is the one which is the fair price, right?
yeah, that's the Oracle aggregated price. Yeah.
I think the bottom one, if you, Paul, if you scroll down, this one, the price deviation, which I really liked when I saw it, and the spread one, which I thought really tells you the arbitrage story, right?
Yeah, exactly. That's the point of the point of this Oracle is to mimic high frequency trading.
And what can normal people do with it? I mean, this looks cool, and it's obviously the first of its kind. What can the people that are going to be borrowing and lending through the platform, what is the use case for them except just staring at it and mesmerized by it?
I think you can just see how efficient the market is, in the sense how much arbitrage is there, how volatile is it between exchanges. Ideally, we're going to close the gap ourselves with arbitrage bots if it's not already done, or at least if it's not done well enough. But then, like, if you want much more detailed information, I think a good project that I'm following on Twitter is Kaslens. They have quite a bit of detail on explaining the market movements and all that. I think this is just more of a how efficient is the market and what's the fair value.
And to answer to your question, Ankit, what the user of the lending platform can win with this Oracle? Wow, why it's good for them? I think it's always a question of trust, because the vision of Kaskad is not only on the Kaspa network. We don't think just to stay in Kaspa and not open to other platform or other chain. If we have a vision to be the best platform or DeFi, or to be one of the best, we need to build trust with people. And the price will be the first step to build trust. And if you imagine tomorrow you have the choice to choose between different DeFi platform, and one is using an open oracle, and you can follow exactly how the price is calculated and why, and there is a white paper with open source, and you can see in live the oracle. Maybe you will say, okay, I would prefer to follow this platform for the same yield, because I understand how it works and they are transparent and they show how they work. And we think it can be in every aspect of the DeFi platform a big, big gain for the user, because he can quickly understand how it works. I think it's a point that, it's not a direct value, but it's just to build a trust.
Yeah. Thank you, Julian. I think it's great. And guys, this is well done. I do have a couple more questions before we move on to our exciting discussion around the fundraising efforts. But Julian, please go for it.
Just the last things before I forgot is people needs to know that this oracle is scalable. It means, it works now for the price of CAS, that as we show, but it can work for every coins. It's like the mechanism to build this oracle with the price and the order book of different sources can be implemented for Solana, can be implemented for Ethereum, for Bitcoin, and everyone. It's for that I said we don't want to just do it for CAS. We can do it for every coin and be a good trust part for every platform. And it will be useful for us too to open Kaskad to other chain.
100%. And I think that should be the aim for every project, to build not just for Kaspa, but to build for other communities as well, to bring those communities to Kaspa, right? End of the day, that's what matters, right? At least to me. Given it's your own weighted average right here, is it possible to go back and look at what happened on the 10th of October?
We didn't have it storing data at that day. So what we're going to need is, but I actually wanted to understand that. So trying to get this tick by tick exchange trades historical data back to like September to understand, who followed who initiated after Binance. I think it would be very interesting information. So it's in the plans right now. It's not. We don't have that data.
Yeah, I think it was just more. I was curious because this is where I think you really get to see the swings, what happened during those extreme volatile times.
Yes.
And it's more of a stress testing even for you guys, right? To being able to see exactly what could go wrong and what did go wrong that time, given you have access to that data, right? You should be able to use some of the APIs from the exchanges.
I think ultimately, I think we also want to check that if we had this oracle live at the time, we would have prevented X amount of liquidation on the platform, right? This is the selling point also of this oracle. You only get liquidated if you play a risky game and you got liquidated at a fair price and not a fake price.
Exactly. So yeah, lots of use cases. And what about saving the data? Are you can I download this data? I want to play with this data, right?
Yeah, so actually you can listen to the live data with our WebSocket. And for the old data, we work on a solution to store it and maybe provide it to anybody who want it.
Cool. No, beautiful. Thank you, guys.
But this question is an excellent bridge for the fundraising because these two problematics are too linked with the fact that we have to spend a good amount of money for servers if we want to back up all the data and provide to other people. But the same if we want to acquire or if we want to buy historical data, it's the same. The price is not free. We can have it, but it's not free. And if we want to have it for a lot of sources to trust test for the 10 October, the Oracle, we need to buy it. So we need funds.
Right. So thank you, Julian. That was a good segue to the fundraising part. So let's discuss your fundraising campaign. So you guys are currently fundraising. You're in the middle of fundraising. I think last time I saw you've already raised 60% of the total amount that you wanted to fundraise, around that number, correct me. So let me perhaps start by asking why you guys are fundraising. You've answered for my report, but I'm sure there's bigger reason to fundraise.
Because when we have the idea of these services with Jack, it was a few months ago. We would like to have the best team to build it. It's like, if we build it, we need to have very good people on tech, very good people with Oracle, very good people in design, and to find these people to aggregate the team. It's a good part, but if we don't pay the team for the middle long term, it's complicated. So the first reason of the fundraise is for sure to succeed to maintain the team on the middle term, on a long term period, and to be able to say to the team, okay, you can be full time on this project, and you don't have to jump in every project or just have this for a draft of your life because we want to provide a very good services. But it's normal that people, before to help the fundraise and to say, okay, I will support you, they would like to see some of the part of the tokenomics, some of the part of the product. And as for that, we present a lot of things today. But the second part of the fundraise too, it was like when we go deep on the mechanism of decentralized finance, we realized that we can be more competitive with the token. Because a lot of people say, yeah, why a token, again a token? And they are right, because all the tokens go to zero. So they are right to say, why a token? It will go to zero. And we see a lot of disappointment with the KRC20 token. So it's normal that people have this reaction. But if we want to compete with other platforms, Aave, Morpho, PancakeSwap on BNB chain, Jupiter on Solana, because it's our competitor. It's not the Kaspa ecosystem, our competitor. We really need to have that in head, even on a classic finance. It's better to have a token to incentivize people to provide liquidity on our platform because we need to be competitive on the yield we can provide to people. And the Kaskad token will help a lot. And if you look at the token of the best DeFi platform, I talk about Jupiter, I talk about and the Jup token, Aave token, or even if you look about the Cake token on PancakeSwap, if you look when they start at the TGE, the value of the token, and if you look now, the value of the token, it could be interesting for people who invest in this platform to have a good gain. It doesn't mean when it will pump, you don't have to sell, because when it tells you attach for all this token, it's normal there is a correction. But on the long term, if your tokenomic is well designed, you can be profitable. So we say, okay, we need fundraise, we need token, so let's open this token to a community round, and let's start with 6 million diluted value market cap at the beginning. And I think if you look about all the platform, it's fair price, and it can be a good deal for everyone. It's a good deal for Kaskad because we can build in long term. It can be a good deal for people who provide money at the beginning and invest, because we hope they can have a good return on investment.
Nothing gets done without capital. like capital has to be invested in any business. So just like this business, you guys got it to this far, as we're discussing today, what we are seeing here. And obviously, if you want to sustain for long term, you have to have capital. But what I was going to ask is, why are you guys specifically choosing, right? Typically, when you fundraise, you have either you go to institutions or you go community route. You guys are choosing to go community route, right? That's how you're doing the fundraising right now.
I think Kaspa always worked with the community round a lot of the time. Even for Dag Knight, there is a fundraise and people give cash to help Dag Knight to be fundraised, if I remember well. It was at the beginning of Kaspa network. So even the core team has some time for fundraising to build their system, and it's normal. Because as I say, you have to pay the team, but too, you have to pay the architecture of your services, and more the architecture of services cost a lot. But it's for that we go to community round, because we think it's an opportunity for Kaspa community, and because it was like that with Kaspa. And another point that is very important to have in head for people who listen, we can go to institution, but we have to build for institution, because no one's know Kaspa. We believe when we are in Kaspa network, oh, Kaspa, everyone knows, but no one knows. When you go to Kaspa, they don't care. They want Solana or Ethereum. So we have at the beginning, we have the right to be at the beginning, but to go to institution and to say, okay, we want to raise 1 million, and we are working on Kaspa. They are like, on what? And that's the reality. It doesn't mean the community did an exceptional work of communication, I think, but we are just at the beginning. It's for that. Some people can say why a token or not, why they don't go to VC, but VC doesn't know Kaspa.
Yeah, I think it's a typical challenge for all of the builders I've spoken to that have raised or are looking to raise. It's not that there is not enough capital. Capital is there. It's just they don't have the understanding of Kaspa, what Kaspa is, and that's a big challenge for builders. That's a big challenge for anyone, right? So look, I hear you. So just on the fundraising part, so you're raising at a valuation of 6.25 million, right? Just quickly for the community, how did you guys come up with that number valuation now? And did you sort of benchmark other similar projects?
Yeah, we benchmarked a lot of projects inside Kaspa and outside Kaspa, and we were assuming that launching on mainnet at a 12 million valuation was pretty fair as compared to all the competitors that we had monitored. And also, I think it's important to distinguish between FDV and initial market cap when we launch, because people see how they are launching a community round at 6.5 million. That doesn't mean that we want to raise $6.5 million first. That's the first mistake people make. We want to raise way less than that. But also worth noting is that the market cap of Kaskad at the day at launch would be sub $700K, which is super low. So I think if you project investing in some lending platform on other chains, sub $1 million market cap, it should be a good opportunity for you to be on the first early investors. Usually, if the platform works, does a good job, right? So we just calculated that the fair value of the platform at launch was at 12 million because it was simulating something like 5 million worth of TVL, which is something that the top 900 lending platform are able to capture today on DeFi Lima. So we were like, of course, we want to be at this level when we launch. And of course, we want to scale up to the top, maybe top 50 level of top DeFi platform at some point. So yeah, for us, we are starting super low. We are starting with the community. We know that it is a challenge, especially during this market condition, right? But for us, it felt ethical that we will start offering this deal to the community, see how the community reacts, and then after 1 month of round, we will open to more, strategic partners and targets that we have on the pipeline. But for us, it's fairer that we share it with the community first.
Oh, no, makes sense. And how long of a runway it'll give you? So I think the target is for this round. Target is
Yeah.
1.25 mil, right?
Yes.
Yeah. And soft target is 750, if I read it correctly.
Yeah. Soft target is 750, and the ultimate target for the race after round 2 will be 1.6 million, and this will offer us a runway of 18 to 24 months for a team of 10 already. And like Julian said, you can't expect to work with people skilled like Paul or Elliot and just expect they are going to stay with you pro bono for 2 years, right? At some point, they are going to be captured by other firms and other projects. So you want to be able to pay them at some point. This is only natural in any business.
Yeah, resource is expensive, and good resource doesn't stick around.
Always.
And I like Paul and Elliot are both smiling. Elliot, I'm gonna change your name to Eminem.
Yes, sir.
Yeah,
Very good.
Just talk about the KSKD token, which is going to be your token, right? So, what sort of use cases are you thinking it will provide, right? What is the role of the KSKD token that you're looking to provide once, obviously, token or TG happens?
Yeah, so to stay super simple for everyone, the role of the Kaskad token is to operate as both a utility token and both as a reward token. Because if people play the game on Kaskad, meaning if they supply a certain amount for a certain amount of time, if they borrow at a certain level of LTV for a certain amount of time, they are going to be able to claim some rewards in Kaskad. So they are going to earn some APYs basically as a supplier, but on top of that, if they provide more or stay more, they are going to generate more revenue, more yield with the Kaskad token. So this is the first utility, and we designed it this way to incentivize more liquidity provision on the platform. We want to attract more players from other chains to find this platform attractive to them. The second layer will be to allow people to become voters by staking the Kaskad token into a staking pool. And by doing so, so you have to fill two conditions to be a voter. You have to have some Kaskad token locked into a staking pool and also provide a supply position. So you have to prove that you are actively supporting the platform. You are part of the platform and not just sitting with some Kaskad token
So
in
this
your
is the
wallet.
approach, right?
Yes.
Every
So
month.
we are measuring all activities from all users by on an epoch-based system. So one person who is taking Kaskad token in the staking pool and also providing supply liquidity on the platform becomes a voter. And once you are a voter, you get access to all the resources and the fees that are generated on the platform. You get access to 65% of all the fees that we generate, and you get to decide how to reallocate them. So if you are part of the platform and active on it, you are basically governing how the platform is going to reroute all the resources to you and to the other people like you. So we are giving up 65% of all the revenues that we generate for the sake of the voters slash active suppliers and borrowers. Because we felt that it was important that all the revenue, most of the revenue goes to them and they decide how to use it, how to reallocate it, how to burn the supply. Because there are many things that we can support with a good liquidity on the platform. So the idea was that.
Right. And what portion of the capital raised,
Yeah.
when you've actually ended up raising it, will go as a liquidity for liquidity formation? If you end up raising 1.25, what portion of that will go into, like, one is liquidity, second one is insurance fund, if there is going to be any insurance fund as part of it?
There is going to be an insurance fund, but we will need to build it with time, right? You cannot start with $1 million worth of insurance fund because we want it to be in stable coins or something that is stable. We don't want to attach it to a volatile asset. This is super risky to do it this way. So if we were to raise at the hard cap, we will be able to allocate 250,000 K worth of liquidity in stable and the equivalent amount in Kaskad. So that's 500,000 worth of liquidity for trading. And then we are going to add up to 25% of all the funds that we raise in additional liquidity to support the selling pressure for the first 18 months, meaning that if you have participated in the fundraising and if you are providing liquidity, we are going to inject a certain amount of this budget that we raised to re-incentivize people into staying and into playing the liquidity game, so supplying, borrowing. So this will help us mitigate the selling pressure that we create. And the rest of it is going to support the team, the infrastructure, also the legal refund that we need to operate because we did a lot of work on the legal part of the platform. So we have a token company that is regulated. I just received an email from Storm partner, Julian. They are going to deliver the legal opinion on the Kaskad token as a utility token officially at the end of the week. So we have also this part covered. We want to offer a service that people can feel they are protected in because it's legal. It's legal to use the token. It's legal to govern with the token. We are doing this under the regulation of the law. And you can't expect to scale at a certain level if you don't have a proper docs team, proper regulated, a platform. If you look at what Aave is doing right now, pushing dApps and pushing partnerships with Tangem and all, they are all regulated, and this is how they are able to scale. And this is what we want to bring to Kaspa as well. It's super important.